Hello everyone, welcome back to another monthly rendition of Girard's Monthly Market Update. I'm Jim Jacobson and this is Chief Investment Officer Tim Chubb. Thank you for joining. So Tim, coming into the end of the year, what should we be thinking about?
Yeah, investors at this time oftentimes forget, unfortunately, that it's a perfect time to do some tax planning ahead of what ultimately is the rush, ahead of April 15th. And so, after a great year for the stock market, it's important to take a look at your capital gains and do some, year-end planning.
Yeah, and you know what, you hit it right on the head. It has been a good year. I think some people don't feel like it because of the back and forth with the markets and the Fed and the politics, but the fact is, when we look at portfolios, we're seeing quite a few gains and not very many losers, but that brings me to the first one. If you do have some losses in a portfolio, now is a good time to think about taking those losses. You can harvest those against any gains that you may have taken in the previous year. And if you have losses that exceed gains, you can apply $3,000 of that against income and then carry forward. Now, look, we're not tax accountants here, but these are some of the basic tips that we look at. So some other things that we look at, easy things like your 401k contribution or 403b at work, your employer-sponsored plan. You have 5 or 6 more weeks here now, depending on the time, to get this maximized. So I know I just maximized mine out. I double-checked that. You have that. If you have an IRA, you might want to wait till you do your taxes next year because that contribution can be made until April 15th. So just double check with that. And then one thing people don't think about is the charitable giving. So with the change in tax laws a couple years ago, a lot of the donations have been capped and people just take a standard deduction now. But there's something you can do in terms of setting up a foundational giving. You can accelerate and perhaps still then qualify for an itemized deduction. So work with your accountant on that, but that's an easy one that we see.
Yeah, and the last thing I'd say is don't forget to take your requirement of distribution if you're over the age of 70 and a half. It's great to be able to make contributions charitably from that IRA, which is allowed for this year, and overall make sure you're not facing a penalty and you forget to take it by the end of the year.
That's a very good point, and I have to remember that many of our clients are baby boomers and they're scaling into that time frame. So Tim, we're again approaching year end. We talked about some tax tips. Let's talk about where the interest rate market is and where the Fed is. They had a meeting recently with one more to go this year. What's happening in the interest rate market?
Yeah, so the Federal Open Market Committee cut rates for the third time this year, basically unwinding most of the rate hikes that we saw in 2017. I don't personally think the Fed's going to cut rates again this year. They pretty much gave us the insight that they're probably going to wait until 2020 to reevaluate things, and even then they may look to keep things status quo to not jeopardize an election and the economy during that year. But overall, we've seen the yield curve reinvert, uninvert. As we've talked previously, we had a yield curve inversion earlier this year, generally a looming sign for a recession. However, with the recent Fed cuts, the yield curve has inverted and has steepened, which, if you remember from prior times of us, going through what that means for the economy, it actually bodes well and seems for us, I guess, investors are potentially thinking that growth or inflation may reaccelerate greater than where things are currently at. So I think overall that's good news.
I do too, and if nothing else, it just takes that headline off. It takes away the media propensity to talk about something bad. So when the yield curve is properly shaped, even if it's still a little bit flat, the fact is it has its proper shape now, and it takes away a negative. I always kind of think of it as like an ice cream headache. When you eat the ice cream too fast and you have that crazy headache and then it goes away, you're not actually any healthier, but boy, do you feel a lot better. So to me, that's kind of what this is. The yield curve is now properly verted, whatever the technical term is, and it looks much better. Okay, Tim, so we are finished with the third quarter earnings. I know some of the last late reporters have come out this past week. What have we seen, and what's the upshot of it all?
Yeah, so third quarter earnings are just wrapping up. We're getting through what was a pretty disappointing quarter. If you were to look at it on a year-over-year basis, we saw about a 2% decline for third quarter earnings. First time we've seen 2 consecutive quarters of year-over-year declines since 2016, the end of 2015. But you remember it was off a large base from 2017. We saw over 20% earnings growth last year as a result of strong economy, but also tax reform. And so to be expected, a little bit of a pause, so far this year. But overall, companies are estimating that earnings growth will, come in around 8 to 10% next year. Could be a little lower than that, depending upon how much the strong wage numbers we've seen recently start to eat in the profit margins. But I think if we were to wrap up the year with about 3% sales, 3-4% sales growth, and looking at 2020 and see about 6% sales growth on the top line, we'd set up for a pretty nice 2020.
It will be interesting to see how the year-over-year comps come along. As you've said, this past year they were basically flat because we were coming off of the sugar high of tax cuts. So, all right. Well, Tim, thank you very much. Good information there. And thank all of you for joining us again. Have a wonderful holiday season, and we look forward to talking to you again next month.